Can you really get credit without a personal guarantee? Well, tech issues. Can you really get business credit without a personal guarantee? A lot of people ask that question, and today we're going to be mapping that out during this training. We're talking about the real story about getting business credit without a personal guarantee. We're going to take a quick look at what business credit is. We're taking a look at when business guarantees or when personal guarantees are needed, when they're not, how to get around personal guarantees with business credit. Look, if you want to get credit in a business name without a personal guarantee, without personal liability, this is the training you want to see. We're going to map out everything you need to know to be able to make that work. So first of all, when we talk about business credit, we're obviously talking about credit for a business. It's in a business's name. Okay, so the nice things about business credit, well, there's a lot of benefits, but some of the main benefits is that you can get it if you do it the right way, without a personal guarantee, without a personal credit check. That means your personal credit quality isn't a factor in whether you get approved. It also means that you're able to get approved without a personal guarantee or without personal liability. So just like you have consumer credit, your business has a credit report and score that's linked to its EIN. And when we build this, the business can basically stand on its own, where it doesn't need your personal guarantees. It doesn't need your personal credit check. So we're talking about credit when we talk about business credit that is in a business name. It's linked to your EIN. It's a credit profile and score that reflects your business's ability to pay its debts. So when your business builds its credit profile and score, then it's able for your business to start funding itself without relying on you and your personal guarantee to pull you through. Now, when we talk about business credit reports during this training, know that there's kind of a difference here. Business credit's really when I talk about business credit, I'm talking about the credit a business can get. That is reflected on a business credit report. So a business credit report, much like a consumer credit report, is kind of a report that lenders and credit issuers and a lot of sources can actually use just to see a summary of how you pay your bills, the accounts you are paying, how are you paying those bills. Credit scores are on those reports that reflect how you're actually paying those bills. So the report is what a lender or credit issuer is going to look at to determine if you should be issued credit or financing, how much you should get, even the rates and terms that you should actually pay. So all of that is actually done through a business credit report. And again, on business credit reports, what we also see is credit scores. So on the business credit reports, we're also going to see business credit scores. And on business credit reports, we can see as many as 5 of these credit scores that reflect all different types of risk for those that issue us money. So business credit report, business credit is going to show on a business credit report, and how you pay your bills is ultimately going to be reflected in a business credit score. Okay, so to break down some of the terminology. Now, what's a personal guarantee? Well, personal guarantee basically means you're personally responsible for the repayment of the debt. So by definition, all personal credit accounts have a personal guarantee unless you're not a signer for those accounts. So this could also mean a hard pull on your personal credit report. So there's some adverse consequences to personal guarantees. First of all, this means you're personally liable for the debt you're taking on, which makes a lot of sense if it's personal debt. Doesn't make a lot of sense if it's business debts. There's ways to get around it where you don't. We'll talk about this today, where you don't have to be personally liable for your business debt. The other drawback is that when you provide personal guarantees, you're basically also authorizing personal credit checks. Rarely, I say rarely, but to date, I've never seen a credit issuer where these two aren't linked, meaning a personal guarantee is associated with a personal credit check almost all the time. So the problem here is it results in a hard pull on your personal credit report, which doesn't just only put an inquiry on your credit report, but it also means that your approval in a lot of cases for business credit is based on your consumer credit quality, which is part of the reason we need to try to get away from this, okay? So however, in theory, if your business has an account in its own name and it's set up to be a separate entity from you, the owner, well, then it's responsible for its own debt. And that's what we're trying to do. So ultimately, I refer this to the business funding itself. And that's the benefit of business credit, is that you could build a credit profile. Now we've talked about what that is. You could get business credit scores. We've talked about what those are. And then the business credit profile and score can be used for the business to be able to get money without needing you as a personal guarantee, which means the business is responsible for its own debt. They can come after the business assets if the business defaults, but they can't come after your personal assets. We're creating this separation. However, many companies require personal guarantee for the business owner before extending business credit. A lot of them, and that's the catch-22, is that when a lot of people try to build business credit, they do it out of order. They do it follow the wrong steps. Then what happens is these credit issuers require a guarantee from the business owner because the business credit profile isn't built. The business can't yet stand on its own. Okay, especially true for small businesses because the failure rate is so high. Look, I can look at statistics over a year, 5 years, 10 years, it doesn't matter. The majority of people that start businesses end up not having those businesses over a long period of time. They usually close those businesses within a shorter period of time, 1 year, 5 year, 10 years. So what lenders and credit issuers are looking at is that this space is inherently very risky, especially in the beginning stages of a business, which is why personal guarantees are desired by lenders and credit issuers. And that's the thing you have to keep in mind is that lenders and credit issuers are going to get personal guarantees from you because they can. If you're willing to give it to them, they're going to get it from you because the more ways they have to get their money paid back, the more comfortable that they feel. So let me give you an example. I had inaccurate information on a LexisNexis credit report reflecting out of judgments, which I never had. And I ended up getting it cleaned up and getting it done where this wasn't the end result. But as a result, when the file was initially underwritten, the lender not only wanted to take our business assets as collateral, but they wanted to take my home as collateral as well. Well, the business assets were well more than the loan amount. So now what they're saying is because they're uncomfortable, they want as much security as possible. So they want all the business assets and my personal assets as collateral as well. Now, we got around that and got that all waived where the personal assets aren't required. But it just goes to show how lenders handle this when they're not completely comfortable, how they're going to take as much security as they can get and you're willing to give them. Now, in this case, if we didn't know what we know being in lending, we might have just done that. We might have just let them collateralize my home. But knowing what we know about lending, we were able to say, wait a minute, that doesn't make sense. You shouldn't be going after this. Why are you even attaching the home? A personal asset is collateral when the business has enough assets. They said, we're uncomfortable for this reason. We mitigated that. We proved to them that it was inaccurate information, and they no longer required that. So it just goes to show that there's this comfortability that lenders want to have, and they're going to go ask you for everything you're willing to give if you're willing to give it. But it doesn't mean you have to give it. And that's the key here. The key with personal guarantees is that it's oftentimes a choice whether you provide it or not, as you'll learn about today. And if you're getting value from this training, do me a favor, hit the like button, hit the love button, hit the share button. If you're walking away from this with information that you did not know, or this helps you further progress in the business to get financing, especially without the guarantee. So can your business get credit without a personal guarantee? Well, the short answer is yes, it can, but there's some caveats here. First of all, there's some financing you just cannot get without personal guarantees. It's just not going to happen unless your business credit's built over 5-10 years and it's really, really, really deep. And what I mean by depth in a credit profile is I mean you have a lot of accounts reporting on your business credit reports, and the amounts are high. It's not 50 accounts where you're spending less than $100. Somebody can look at your credit report and see you're spending $1,000, $10,000, $15,000, $20,000 potentially or more a month. So that is definitely possible to do. The other thing you got to keep in mind is that there are reasons personal guarantees are asked for. We've got to give the lender the security to know that they're okay without needing the personal guarantee in order to get around it. So we've got to be able to give them that security in order to get around the personal guarantees. So can you get business credit without a personal guarantee? Well, yeah, absolutely you can. The majority of people that issue business credit, vendors we call them, will give you credit without a personal guarantee. Now, some have minimum time and business requirements. Some have minimum revenue requirements. Some of them have minimum accounts that require on your business credit reports to give them to you. But what we found is that the vast majority of vendors will give you credit without a personal guarantee if you just have a volume of accounts reporting on your business credit reports. How high of a volume you have is what determines what sources will give you the credit without a personal guarantee. I'll give you a simple example. Okay, if I have 5 payment experiences, 5 accounts reporting on my business credit reports, well, then I can get an Amazon credit card without a personal guarantee. But I can't get a loan through Ally for a car. But if I have 14 accounts on my business credit reports, I can get a car loan through Ally without a personal guarantee. So I can go through this whole sequence of fleet accounts needs this many, and retail credit needs this many, and Staples wants this many, and Office Depot needs this many. But this is what it comes down to. The more accounts on your business credit reports, the more of these vendors will give you credit without a personal guarantee. Now let's talk about the term vendors. It's oftentimes misused. A lot of people that try to, if you go to a novices, like we've got a group called Get Business Credit. I don't know, 55,000 people in there that help each other build business credit. All novices, right? Trying to help each other. So when you go in there, a lot of them will refer to vendors as Uline or Granger or Gimple or these starter vendors. but they are vendors. Those are starter vendors. But also vendors are staples. They're Office Depot, they're Lowe's, they're Home Depot, they're Amazon. They're almost all retailers. These are vendors as well. So the vendor is just typically somebody that's issuing credit to buy stuff in their store. That's what a vendor is. If you really look at the definition in Investopedia and these other places, that's what vendors really are. So these vendors will extend you credit without a personal guarantee, but you've got to meet their requirements. And as you're learning here in business credit building, a lot of the requirements are how many accounts you have reporting on your business credit reports. If you have the right amount of accounts, then you're able to get approved without that personal guarantee and credit check. And again, if you're getting value here, go ahead and, tell me what you like. Tell me what you want to know more of. Say, yes, this is good insight. Yeah, I like that part. That makes sense. Liz says, hey, Ty, Melissa from Sell Prop Now LLC in Patterson, New Jersey. Hello, Liz. Melissa, appreciate you coming in. I need my business to fund itself. Need business credit quick. We'll talk about how to do that. Okay, so can you get business credit without a guarantee? Yes, you could even get charge cards. There's places like Brex and Divvy that will do this as well. Now, these are charge cards, not credit cards. So you have to pay off the balance monthly. So these are called charge cards. So there's some places that are in between like Brex and Divvy that will help you build business credit where you can even get these kind of charge cards without a personal guarantee, without a personal credit check. Okay, so there's also business credit cards available without a personal guarantee, right? We can get Visa cards, we can get MasterCards, we can get auto financing, we can get computer leases through HP, through Dell, through Apple. We can get credit at almost all retailers, all without a personal guarantee or credit check. It's even possible to get some financing without it as well. And we're going to talk about that as we get a little bit further into this training. So what's so bad about personal guarantees? Well, nobody really likes risk. And what we've learned through COVID and what I learned through the mortgage crisis is that it doesn't matter how smart you are, how good of an entrepreneur you are, how well prepared you are, how much cash you have in the bank. You just can't control these dramatic changes in the economic climate, right? And when the mortgage industry collapsed, man, we just saw all kinds of problems. I mean, years of recovery throughout our country. When COVID hit, everybody pulled back. And if the government wouldn't have put trillions or whatever numbers beyond trillions into the actual environment, then we would have seen something potentially similar to what we saw in the mortgage crisis of years of recovery. So what I've learned in going through two massive economic changes in owning and being an entrepreneur is that it doesn't matter how smart or good you are. There's things that come out of the left field you have no control over, right? So you could be the best chef in the world and run the absolute finest, best restaurant. But you can't control when the government comes in and says your restaurant has to close due to COVID, right? For a month, 3 months, 6 months, a year or longer. Places like New York or California, you can't control that. It's completely out of your control. So there's so much risk in running a business because there's so many things out of your control that we don't want to voluntarily offer our personal assets and offer personal guarantees if we don't have to. Like, this is not something that we want to voluntarily do, okay? And again, we want to keep our personal finances safe. We don't want our family, our kids, our spouse, our significant other to suffer because we've made bad business decisions or things went bad in the business that were completely out of our control, right? So we don't want that to happen. So let me give you an example of what happens here when things go wrong. Okay, so when I owned a mortgage company, it was the first business I ever owned. What happened was the mortgage industry basically, I'd say collapsed, but the mortgage industry, let's say, collapsed for the time. I did jumbo loans, which went away overnight. There was no more jumbo loans at that point. They're coming back now, but for many years there weren't. So all of a sudden what I did just went away, right? And I tried to make it through and make adjustments, but had to close down the office and started to default on some business debts. So then what happens is because I personally guaranteed those debts and ended up defaulting, the lenders were able to come, or the credit issuers were able to come in and literally wipe out all of my personal bank accounts to zero. There was no money left. So here I am thinking, okay, I can recover. I have money in the bank and I've got these credit cards with tons of available credit. But the minute I started to go late on business debts, it reported on my personal credit report. All my credit issuers lowered my limits to what I owed. So now all my available credit was gone and my credit was ruined because utilization is 30% of your score. So all of a sudden, if you owe 100% your max out on every credit card, your credit scores just drop, which is what happened. Plus I had late payments on there. Now, all the money from my bank accounts is wiped out. Literally, it's there 1 minute and it's gone the next. The problem there is that money wasn't even mine, right? I had checks written against it for thousands of dollars. So then the bank account goes negative thousands of dollars because the money wasn't even there to take. And so now all of a sudden, all my available credit's gone, all my liquid cash is gone. Okay, that is a real story. That is my story. That's exactly why you don't want to provide personal guarantees. You don't want to give a credit issuer and lender the ability to come after your personal assets if you default on a business debt. If you have any choice to avoid it, you want to absolutely avoid that. And Kyber says, awesome information. Love it. I appreciate you giving me that feedback. And Mrs. Ambitious says, how much in dollars of business credit, loans, or credit cards without a personal guarantee can you get? Or will you ultimately have a PG for higher amounts? So there is no limit. So the question here is, how much can you really get without a PG? Well, there is no limit. There's no limit to the amount of money that a business can get. The same way there's no limit of how much credit you can get as a consumer. So let's use Dell as an example. Let's use Apple as an example. Let's use any of them. Choose. I mean, Walmart is an example. If we pull their business credit reports, which I've done training in the past where I've reviewed all of them through the election, I looked at Trump organizations. I looked at Clinton Foundation's business credit reports. So when you look at these large companies, you'll see they have credit lines for hundreds of millions of dollars that they've obtained without personal guarantees. So if we think about it, if we see $100 million credit line for Dell, well, we know that Michael Dell didn't guarantee a $100 million credit line. As a matter of fact, they don't even care about Michael Dell's guarantee because Dell is assets and is worth significantly more than the founder. So when we see these very large companies, we realize that the owner doesn't provide, the CEO isn't providing a guarantee because the assets and the value of the business well surpasses the individual assets of the owner or CEO. So there is no limit. Great question, but there's no limit of the amount of money that you're able to get without the personal guarantee. And Victoria says, how do we need to sign up to Dun & Bradstreet? Well, you can go to creditsuite.com/Duns, creditsuite.com/Duns, D-U-N-S, to get your Duns number set up. You can get credit reports with Dun & Bradstreet. They charge you $150 a month. If you want credit reports with Dun & Bradstreet, Equifax, and Experian for only $24 a month, a lot cheaper, obviously, go to creditsuite.com/monitoring. At creditsuite.com/monitoring, you're able to come in and you're able to get credit for only monitoring for only $24 from all three bureaus. So again, I love your questions. Keep them coming. Anything I can help you with along the way, put them in the chat. So a personal guarantee can accelerate your business growth. Look, if you're willing to provide this, it will help you expedite because there's credit I can get sooner if I'm willing to provide a personal guarantee. I used Amazon as an example later. Let's dive into that. I can't get credit with Amazon without a personal guarantee if I have no credit on my business credit reports. But if I'm willing to get a credit check on the consumer side, willing to provide a personal guarantee, I can get Amazon in the beginning. So if I'm a over-the-road trucker and I know I need a WEX fleet card and I don't want to take the time to build the 8 accounts on my business credit reports, I need to get a WEX fleet card without a guarantee, then I can get a WEX fleet card right away. Pay a $500 deposit, provide a guarantee, and get that WEX fleet card. So you can use a personal guarantee to expedite your business growth. There's credit that you're able to get along the way to be able to do this. So the other thing to keep in mind is that, there's sometimes you just can't get out of personal guarantees. It just doesn't work that way. Okay, so in a lot of cases, when you're newer in business, when you don't have a built-out business credit profile, you're not going to go get loans and credit lines for $50, $100, $250,000 without personal guarantees. And I hear this a lot. I hear higher-end businesses that say, hey, look, we do $2 million in revenue. I want a $250,000 credit line without a personal guarantee. Well, why? I mean, what would make you think that somebody would give you $250,000 without a personal guarantee? Let's look at your business credit report to see if it even reflects that you could absorb that. And it doesn't. We look at the business credit reports. We have 3 trade lines with a recent amount of credit used that's less than $100. So you got to stop trying to get out of guarantees in a lot of cases. With loans and credit lines, it's harder to do until your business credit depth is established, till you really establish some depth and show that you can actually manage that kind of money. So for example, if I look at Dell's credit report, I see $50,000, $100,000, $50 million, right? Credit lines. Well, that's because they've reflected that they've already shown, they've proven they can handle that much credit and pay it responsibly. The more credit you build, the more credit will be issued to you because the more you've proven that you can responsibly pay it. But you're not going to get a $250,000 credit line and get out of a guarantee if the most amount you've ever financed is $5,000, $10,000, right, on your business credit report. So some things to keep in mind. Also, you've got to work on building your business credit. This is what it comes down to. We started by talking about business credit profiles and scores because that's what it's all based on. If you look at Investopedia and other places and the definition of guarantees, personal guarantees are needed because the business cannot stand on its own. It's really that simple. The reason you're being asked for a guarantee is because when they look at the business and evaluate the business, it doesn't look like the business itself is strong enough to stand on its own. It looks like it needs you to come in as a signer because the business hasn't proven itself. So you've got to make sure the business is proving itself, and the business proves itself with the business credit profile and score. And this is where everybody screws it up. Business owners screw it up. What they do is they say, hey, look, I'm spending $1,000 a month on Facebook, and I'm using my debit card to spend that, to make that spend. Why are you spending the $1,000 on a debit card? And the response is because I have the money to spend for the ads. Yeah, but if you used a credit card that reported to the business credit reporting agencies for that $1,000, I could have used the Amex card, bought the $1,000 worth of Facebook ads, used my bank account to pay off Amex before any interest was accrued because I paid it before the billing cycle. Now I paid no interest. I paid for what needed to be paid. But the difference is I created a credit history for somebody else to look at so they can see what I do. So let me give you a simple example. A large part of our growth and scaling has to do with ad spend. We spend $1 million a year on Facebook ads and Google ads. No exaggeration, it's what we spend. So if I spend $1 million a year out of our bank account, which we can do, we don't need to borrow money to pay for our ads. Our ads pay for themselves, right? The money that we make from customers enrolling from our ads pays for the cost of generating those ads. We get a positive return on investment. So we easily have the money to pay for the ads, but why do we spend $1 million on our Amex card? For two reasons. First of all, now Bank of America, Chase, Wells Fargo, they can all see that we're spending $1 million a year. They see 100,000 being used every single month on that Amex card. Now, when I go to get a Bank of America credit card and they're trying to decide my limit, do you think I'm going to get more money spending $100,000 a month on my Amex card versus somebody else who the highest amount they spend is $1,000 a month? Obviously, this is how Bank of America is going to give me a higher limit because they see I'm spending all this money and they say, oh, no, wait. Don't spend it with America. Spend it with us. Spend it with us. I've literally had a conversation with Bank of America in the past where they offered me a credit line for $50,000. And I said, no, thank you. I'm not interested. They said, why not? I said, because I already have a Wells Fargo credit line for $75,000. Their exact words were, how high do you want your approval to be? I said, higher than theirs. And they bumped it from $50,000 to $80,000 just because I asked, because they understand that if they give you the highest limit, you're more inclined to use that card. So what we've got to do here is it doesn't matter if we have the money. We want to always spend the money on these business credit cards and pay them off before interest is accrued so we can show others we have this history of spending money so they'll give us higher limits. Now, the second reason we want to do this is points. And we just had a whole training last week, I think it was last week, on all these points and incentives you can get on different credit cards. So, for example, we get cash back on our Amex card. So now we make, thousands and thousands, maybe even $10,000 a year off of Amex. They give us back in real cash just because of the points we've accumulated using that card. So now I'm using the card instead of my debit card. I'm paying off the account before interest is accrued, so I still have no interest. I'm getting points and cash back from Amex because I'm using the card, thousands, if not tens of thousands I wouldn't have had before. And I'm building a credit history showing lenders and credit issuers that I can responsibly pay the bills. And that's what's going to get me more and more credit. And that is what gives them the security and peace of mind to not require personal guarantees from me because they see the business is spending all this money and the business can stand on its own. So definitely some things to think about when you're trying to get around personal guarantees. Okay, so now let me ask one of these questions. Talitha says, I've been following you for years and I'm finally getting it together. Good, awesome, great job. As long as you're taking action, that's all that matters. And Victoria says, the landlord do not let you sign the lease if you not sign the personal guarantee. What we should do is that, okay, perfect. So This is an example. There's some credit, there's some things you can't get out of without a personal guarantee. It's going to be required. And when you lease a property, if you have no business credit established, that's even a hard argument to have. Now, I have no problem providing a personal guarantee when I sign a business lease. So as I mentioned earlier, there's some kind of stuff you shouldn't even try to get out of personal guarantees because you're not going to unless you have a really well-established credit profile and score. Now, if I've got 50 trade lines on my business credit reports, then it's easier for me to go to my landlord and say, why would I provide a guarantee? Have you seen my business credit report? Here, let me help you pull it. The business can easily stand on its own. Its value is worth way more than my personal credit. I don't want to. And I can try to fight that battle, but you shouldn't even be trying to fight that battle unless you have a well-established business credit profile and score. Brilliant Davis, hello, coming back in from Tucson, Arizona. Victoria says, can we get today's video or slides? Yes, you're on LinkedIn. So if you go to my LinkedIn profile, Ty Crandall, it has all my past videos, and this will be there as well. The slides actually go to our partners, so we don't give those away. But if you're a partner of Credit Suite, you already have access to my slides before I even have them. And Keith Kyber says, is Divvy a good one to use? They wanted a PG for a soft pull. They said they came back and gave me the prepaid option. Yeah, Divvy's good, or Divvy and Brex are good. And I think they will even let you out of the PG, but you have to have some pretty good track history of revenue in order to get out of them. But both of them are great sources. As a matter of fact, we just did a presentation on those two sources and those two sources alone last week that's worth checking out. So you've got to, again, build your business credit. You have to understand that, and I hear a lot of what I just heard here, okay? So here's what it says. I want to sign a lease. They're requiring a personal guarantee. How do I get around it? I want to get a credit card. I want to get a loan. I want to get a credit line. They require a personal guarantee. How do I get around it? There's only two ways around it. One, collateral. Like I said, guarantees are required to give the lender peace of mind, the credit issuer peace of mind. There's two ways you can give them peace of mind. One, collateral. There's a lot of financing out in this world that's based on 401k, stocks, IRAs, that's based on you pledging real estate, you pledging other assets as collateral that doesn't need guarantees. As a matter of fact, the number one type of financing that you can get without a personal guarantee is what's called asset or collateral-based financing. When you provide an asset as collateral, account receivables, real estate, account or 401k, stocks, bonds, IRAs, inventory, etc. When you have an asset worth money that you're pledging, if you default, you can oftentimes get around guarantees. The second way to do it is you've got to prove that your business can stand on its own and pay those bills without needing you. The only way you can do that is to build a business credit profile and score. You can't get loans. You can't get credit lines. You can't get out of leases. You can't get credit cards. You can't do any of it without established business credit. The more established the business credit profile and score is, the more types of credit and financing become available without the personal guarantee. And I gave an example earlier. I'll give you another one. Again, 5 payment experiences, you can get retail credit with a lot of retailers without personal guarantees. You have 8 accounts in your business credit reports. You can start to get fleet credit at fuel stations, gas stations without personal guarantees. You have 14 accounts. You can get computer leases with Apple, with Dell, with HP. You can get Visa card, MasterCard. You can get auto financing with Ally, Toyota, Ford, GM, all without a personal guarantee. So if you want to get out of guarantees, you got to start building that credit profile, and you got to build depth. You got to get accounts, as many accounts on there as you can, and you got to show that you're using those accounts consistently. When you do those two things, the more tiers of credit and financing become available without the personal guarantee and credit check. And eventually, you're like Dell. You're getting millions of dollars in credit lines because you've proven that you're spending and using that much money regularly. And I hear that mistake from business owners too. I hear, hey, if I was making $10,000 a month, then I wouldn't need to borrow money. Yeah, you would. You would. Okay. It doesn't matter if you're making millions a month, you still need to borrow money. That's how you grow. So an example of this is Apple. If we look at Apple, we see that Apple has like, I don't know, like they have like $112 billion in debt they're sitting on. So they have $100 billion with a B in debt, and they have more than that in assets. So why do companies like Dell borrow money when they have the cash to pay for it? Because that's how they get so big. It's how Walmart gets that big. It's how they all get that big. And Walmart's an example. 80% of what Walmart sells, they use buying business with business credit. So I always use the Bounty paper towel example. When you go buy those Bounty paper towels, know that Walmart used their business credit to buy them, not cash. Then they put them on the shelf. Then you bought them and you pay cash for that money, for those paper towels. Then Walmart took your cash and they used it to pay off the credit they borrowed from Bounty. That's how 80% of the products they sell are bought. As a matter of fact, business credit accounts for more value in Walmart than all shareholder value in the company combined. The reason Walmart is Walmart, the reason Publix on the private sector is Publix, the reason that Dell is Dell, the reason Apple is Apple is because all of these companies understand how to leverage other people's money to get where they are. And as they're borrowing this money and paying it back, they're borrowing larger and larger and larger sums of money, and therefore other credit issuers and lenders will give them larger and larger and larger sums of money. So the only way you get around personal guarantees is you've got to come in and work on building your business credit. If you don't do this, then you'll never be able to get out of guarantees unless you're dealing with asset-based lending. The only way around personal guarantees is to build that business credit. It's absolutely essential. Now, Julietta says, what would that create a UCC filing placing collateral? A UCC filing is basically a lender notifying other lenders that you owe them money. And that's really more based on lender than type of funding program. So let me give you an example. Cash flow financing, revenue lending, one of the easiest types of loans to get. If you got $5,000 a month in revenue and have been open for 6 months, there's sources that will give you the money. Your credit can be 500 credit score and no collateral, and they will give you the money. Those kind of lenders there's lenders that will do a UCC filing every time and ones that won't. Almost every kind of funding, it depends on the lender whether they're putting a UCC filing on your credit report or not. So the answer to your question is no. Collateral-based financing doesn't mean there's going to be a UCC filing. That's lender-based, not funding program-based. But a UCC filing isn't bad. It doesn't hurt your credit. It just notifies other lenders that you've got money outstanding. Let me give you an example. We had a cash flow financing loan. We paid off. The lender forgot to remove the UCC filing. When we went to get an SBA loan, the SBA saw we had that debt outstanding, and one of their underwriting requirements was to prove the debt was paid off because they wanted to make sure that we still didn't owe that lender the money. So that's where UCC filings come in. They just notify other lenders that you actually owe somebody money. Okay, and Henry, I don't know if I said that right. Eustis, Florida. I've been to Eustis. Awesome. Hey, Ty, good to hear from you. Good to hear from you as well. Brilliant Davis says, thank you, Ty, for helping show the way. I watched a video earlier today on YouTube, and guy kept saying how you don't need to build your business credit and stay away from that 30 and all that nonsense. Well, look, it is what it is. The bottom line is that if you ever want to get away from personal guarantees, you got to build business credit. And if you don't build business credit, you're always going to be personally liable for your business. And if you ever hear anybody say that, then look at their business. What's the size of their business? How big have they gotten using that kind of mentality? Because typically those aren't really, very profitable or high revenue businesses when people think that way. Like I said, the largest publicly and privately owned companies in this country, I can pull all of them. And I often do in webinars where I show how many trade lines Walmart has, how many trade lines Dell has, how many Apple has. I show it, and they're all hundreds. Walmart has 513 trade lines on Experian alone. 513. Think about it. In order to get to a Visa card, you need 14. Walmart has 513 on Experian, just Experian. So it just goes to show how much these large privately and publicly owned companies are leveraging business credit. So let's talk about getting funding while building business credit. Can you get funding? Well, if you cannot get all the funding you need for your business with non-debt options, well, then you want to start looking at debt options, and sometimes they're going to require personal guarantee. So what do I mean by debt options? Well, there's two types of money you can get. There's what's called debt. There's what's called equity. Debt means I borrow money. I got a credit line. I got a loan. I got a credit card. I owe you money. I'm going to pay you fees. I'm going to pay you interest. Equity means I'm not going to pay you back interest, and I'm going to give you equity ownership in my business, stock in my business, ownership interest, angel investing, venture capital, equity crowdfunding, type of scenario. So again, if you want to get around for personal guarantees, well, equity financing doesn't have personal guarantees. You're not personally liable for equity financing in most cases, but you also might be able to come in and you also might want to get debt financing, credit lines, loans, credit cards. Now, we've talked about credit cards. We talked about auto financing. You can do that just based on your building your business credit. But again, the other thing you want to do is the more business credit you build, the easier it is to get away from this kind of personal guarantees when it comes to funding. Now, there is also debt. There is also the type of funding that doesn't require personal guarantees. We talked about this. 401k financing, for example, where you pledge your 401k and borrow as much as 100% of the value of the 401k. It doesn't require personal guarantees. Okay, you're also able to come in and get crowdfunding. In a lot of cases with this, it doesn't require personal guarantees. You're either giving up equity through equity crowdfunding, or you're giving them some kind of bonus or reward for being able to contribute money to your campaign. So think Kickstarter and Indiegogo. This gets you around personal guarantees as well. Angel investors, again, equity financing just doesn't require guarantees. Angel investors, venture capitalists, they're not going to need you to personally be liable for the money they're giving you. Grants, another option to go right from the beginning. You don't have to be personally liable. You don't even have to pay grants back. So you're able to get these without a personal guarantee as well. And there's a lot of other funding options, but you got to keep in mind that when we look at SBA loans, when we look at Fundbox and On Deck and all the rest of these, then in a lot of cases, they're going to want personal guarantees until that business credit is very well established. And SBA, again, is going to oftentimes require personal guarantees through the life of your business, possibly until you get to $50, $100 million or higher. And the reason for that is that at that point, the business is worth so much more than you that there's no reason to even personally guarantee, because the business has so much value and assets that the lender and credit issuer can go after that they don't need to rely on you to do it. So as we look at this whole picture, what we realize with personal guarantees is you absolutely can get credit financing without personal guarantees. You can, without a doubt. The kind you can get right from the beginning are starter vendors, Uline, Granger, those type of starter vendors. They don't require personal guarantees. You can get it right from the beginning. Then with 5 accounts reporting, then you start to move on to almost all major retailers will start to give you credit without the personal guarantee. Sam's Club, Costco, Sam Club, Costco, even Nordstrom and Macy's do this. Then we get about 8 accounts. Then we start to get the BP, Chevron, Sunoco fleet credit without a personal guarantee credit. Then we get to 14 accounts. Then we get to those computer leases I told you about, Dell, Apple, HP, auto financing with Toyota, Ford, GM, Ally Bank. This is where we get the Visa card, the MasterCard. It's where we get all of that without a personal guarantee just because we built our business credit. It's not based on our revenue. It's not based on our time in business. It's just based on the business credit we established. All that money is available to you without personal guarantee or liability. Now, we start to get into loans and credit lines. Loans and credit lines, if they're not collateral, if they're collateralized by an asset, you can get around personal guarantees fairly easy. If they're not, then it really depends on the lending source. Like, for example, I talked about cash flow financing earlier. There's plenty of sources that do cash flow financing with no personal guarantee. We work with lenders that require PGs and lenders that don't require PGs. And a lot of funding products are like this. If you ask the broker you're dealing with, the funding source, there's plenty of individual lenders or funders or fintech lenders that will lend to you without a personal guarantee in a lot of different kind of products. Other ones like SBA, term loans, 100, 250, 500,000, that's tough. It's tougher to get away from the guarantee. It's possible because we know Dell does it, right? We know Apple does it, right? We know that Tim Cook, isn't signing for Apple to get a credit line. So we know it's possible, but we have to really show some depth on our credit profiles. We really have to show that not only do we have 15, 20, 30, 40 trade lines, but we're using these. People are giving us tens, if not hundreds of thousands of dollars in money. We're using that money regularly. We go back to that American Express example where I'm spending $100,000 a month on Amex on Facebook ads. When you start to get to these levels, then you can start to get the higher end financing without the personal guarantee, without the personal credit check. Okay. And Brilliant Davis says 100% what you teach is the truth. I appreciate that. And Full Send Wax says, when doing a net 30, should I wait until the 30 days is up to pay it or pay it right away? So you want to pay it right away. Your payment, your business credit scores are based 100% on how you pay. Well, your main ones are like your Paydex score with Dun & Bradstreet and your credit risk score with the Equifax. So as soon as they let you pay it after the item ships, you want to pay it. Now, I said two very important things there. You always have to pay it after whatever you ordered shipped, or it counts as a cash transaction. And you have to pay it as soon as you can pay it. If I order office supplies from Quill will let me pay the minute I want to. I mean, if they ship the items, I can go in the account and pay it same day. But if I get office supplies from Staples will not let me pay that until they issue an actual statement. So I have to wait. But as soon as you can pay, you want to, because your scores are 100% based on how you pay. Victoria says, if the bid is for 30 years but not good credit or no credit, should we restart a new business name to start over credit builder, or should I take a current business? Well, look, first of all, get the business credit reports and see what's on there. A lot of people think they have bad business credit. They don't have any credit at all, because 97% of vendors don't report to the business credit reporting agency. So you might think you have bad credit. You don't have bad credit at all. So get your business credit reports and see if there's any bad stuff on there. If there is, see if you can clean it up, dispute it. Try to get it cleaned up. You're better to work with a longer standing entity than start a new one. So having length in your time of business helps you if your credit's not too damaged. So get your business credit report. If nothing's on there, great, work with that. If there are some things on there, work with cleaning it up with Dun & Bradstreet Equifax Experian. And then in doing so, then you've got longevity and you've got a clean business credit profile. If your business credit's bad, you can't clean it up, then depending on how bad it may be worth starting over. In a couple minutes, I'm going to get you access to our team so we can look that over for you individually, Victoria, and maybe help you there. Margaret says, how do you get higher business credit cards than your personal credit cards? You use them. It's that simple. You use them. So I oftentimes do a webinar and I show one of our client, Christine's results, and I show how she gets $5,000, $10,000, $15,000 credit cards. Then she jumps to $20,000, $30,000, $40,000. Then she jumps to $50,000 and $100,000 individual limit accounts. I saw her get a $150,000 individual limit account from one company. How does she get her limits that high? It's simple. She uses the credit. You see, not everybody, a lot of people try to build business credit and just, get 5 accounts and then use them and then try to get to 8 accounts and then use them and they just try to use what's bare minimum to get to the next level. But the reality is that the more credit becomes available to somebody that's actually using it. If you're not using the credit, they shut it off. So I'll give you a perfect example. Wells Fargo just recently stopped all personal credit lines. They stopped them. They stopped issuing new ones and they canceled all the current ones they had. People lost their stuff. They fell apart. And so Wells Fargo said, okay, here's what we're going to do. If you've used the credit limit within the last 12 months, we're going to keep the credit line open. If you haven't used the credit line within the last 12 months, everybody's are getting closed unless you directly solicit us and communicate, and we will keep it open for you. This is the way lenders think. What they think is we're not going to give you exposure and give you high limits if you're not going to use them. We see this in the mortgage crisis. Everybody got limits lowered because the credit issuers were tightening up and they had all this money extended that nobody was using. So they started reducing everybody's credit limits because people weren't using the credit limits they were being given. The bottom line is that American Express is issuing you a credit card so you use the credit card so they can charge you interest, so they can charge you fees. Okay, that's why they do it. And so the result is they'll continue. And if you don't use it, then what happens is, or if you don't, you pay it off before the billing statement. I saw a great guy that did this on TikTok the other day. I loved it. He said, let me give you 2 scenarios. And one scenario was just somebody that's not keeping a balance and paying it off every month. And he showed an example of how the credit issuer then 6 months in raises the limit because they're trying to get you to use it and keep a balance so they can make money. They haven't made money on you unless that happens. So bottom line is credit issuers want to make money, and they only make money on people that are using the credit. If they pull a business credit report, which doesn't have limits on it, by the way, it has the recent amount of credit you've used. So if they pull your credit report, they see all you've used is less than $100 on each credit card. Why would they give you a $10,000 limit credit card account? It doesn't make any sense. You're not even using any of the credit you're being given now. But if they pull your credit report and they see you used $3,000 last month with this credit issuer, $7,000 with this credit issuer, $9,000 with this credit issuer, they're going to give you $10,000, $15,000. Now they want to compete to be your highest limit account because they want you to use them instead of all these other people you're using. So the key is to actually use the cards. That's what will get you higher limits. And Victoria says, if the business run for 4 years, then we want to change the business name a little bit. Will that impact the business credit score? It won't, but it's really treacherous. You got to make sure that that name is changed everywhere. I mean, everywhere. Yellow pages, website, social media, Secretary of State, IRS, licensing, anywhere you have that business name listed, you got to update it, because if you miss it anywhere, they're going to think it's fraud when you apply under one business name and they can't locate it, or that business name is different everywhere it's listed. So that becomes very, very important. Full Send says, okay, thank you. I was confused on that. Already got my products a week ago and thought I had to wait to make the credit work. Nope, you want to pay that as soon as you possibly can. Okay, so to recap here, it's virtually impossible for a brand new business to get around personal guarantees on funding. You've got to build your business credit reports and score to get there. If you're not showing the credit worthiness of the business, you're just not going to get there. So the key to get around guarantees is to build business credit. And the more you build your business credit, the more kinds of credit and financing become available without the personal guarantees, unless the caveat here is using asset or collateral-based lending. If you're providing collateral, you can get around those guarantees a little bit sooner. And next time, we're going to take a look at fundability. We'll also look at why and how to use an LLC, because your business entity is one of the foundational principles. We'll be diving into that next week. If we can help you along the way with getting financing for your business, let us know. We work with a lot of sources that can help you do that without a personal guarantee. And if you want to see what's on your business credit reports, give us a call for a free consultation. On a free consultation call, we will do a fundability assessment to help you fix things that are wrong with fundability that are preventing you from getting money now. We'll get your business credit reports with all three major reporting agencies, go over those with you. We'll go get them for you for free. They're $250 from the bureaus. We get them for you at no cost, give you tips and tactics to build your business credit, to get away from guarantees, even how to get all the credit along the way without a guarantee. And we also can qualify you for financing. We can even talk more about financing you can get without a personal guarantee as well. All you have to do is give us a call at 877-600-2487, 877-600-2487, info@creditsuite.com or creditsuite.com/consult to get that. If you want more steps on building your business credit, which wasn't the topic today, but if you want the steps to that, grab our free business credit building guide at creditsuite.com/live. If you go to creditsuite.com/live, like we're live right now, you can get our free guide on building business credit as well. And if you got value from this, I only ask one thing: hit the like button, hit the love button, hit the share button. It's the only thing I ask. If you got value from this, make sure you also subscribe. That way you get notified when we go live on places like YouTube. We have thousands of videos, trainings on YouTube, daily tips on Instagram, Twitter, lots of new content coming up on TikTok as well. Trying to become TikTok famous here for my 10-year-old daughter. That would be like the biggest thing ever, to be TikTok famous in her eyes. So we got a lot of cool content going on TikTok. And we even have a podcast that has over 500,000 downloads called the Business Credit Financing Show that does have some stuff on business credit financing. But the other part of it is bringing in all these gurus that teach you how to start and grow a business from ground up. Every principle you need to know, from branding to marketing to managing the finances to becoming profitable, all of that. It's all on our podcast, the Business Credit Finance Show. All of those links are at the top right of our page, creditsuite.com. You're awesome. This is very helpful. Victoria, thank you very much for tuning in. And thank you very much for your feedback today. I really appreciate it. Brilliant Davis, thank you for your feedback. It works. Unbound Business Solutions LLC. I use the actual Credit Suite. It's working great for me. Thank you for that feedback. I will be calling Sue. Cool Fuel Send. Let us do a consult. We can help you along the way. And Island, I have not seen from you. Island Girl, very helpful. Appreciate the new content. Thanks for tuning in, Island Girl. And I love your name, by the way, as well. Thanks, everybody, for tuning in. Tuesday and Thursday, we go live at 1 o'clock, 11 o'clock on Wednesday, all Eastern time, with all this kind of information. So make sure you keep an eye out for our next training where we talk about more cool ways to get money to start and grow your business. Take care.